Michael Mills, CEO, Body and Mind, on the Dales Report.
All right, I am happy to be joined with the CEO of Body and Mind, Mr. Michael Mills. How are you, sir?
I'm doing well, Shad. How are you today?
Good. Big few days coming up, to say the least. A little thing called the U.S. election. I'm sure that's going to have a lot of interest with what's going on with your business model in the near-term future.
There's a lot of people following this very closely, not just on a federal level, but also on a state and a jurisdictional level as well.
Yeah, it's get your popcorn ready, as I've been telling everybody. This is must-see TV. So, listen, I wanted to get you guys on and talk, a little bit about your story. Let's start things off. Maybe tell my, investors and viewers, we've done some good, editorial content recently about your business model, but from the CEO's perspective, why should investors have Body and Mind on their radar?
Yeah, look, I think that there is a real focus, and we're starting to see it in a fairly significant way on the U.S. cannabis space.
Yeah,
and for a long time, there's really the investor interest has been around the Canadian space. It's been relatively easy to invest in. It's federally illegal. It trades on most of the big exchanges, and to a large extent, the U.S. Opportunities are a little bit maybe more foreign to most investors.
Yeah,
we're certainly starting to see a real renewed interest here.
Yeah, for sure. And well, you brought up the whole Canadian side, and when I look back, obviously, that I've spoken to a lot of people like yourselves in the U.S. market itself. Canada was basically no stranger. Was built on hype, where a lot of the U.S. right now is built on fundamentals, which is why it's garnering so much attention. But the big thing that I'm noticing here is that, you look at these big multi-state operators and, they want to be across the entire, country, for example. But, you've talked to me off camera specifically about focus on one thing, do it really well. You guys are in 4 states, but within small regions, and you've strategically gone out and set up dispensaries in certain areas. Why is there such a great opportunity from all different sizes of companies within the U.S. sector?
Yeah, I think it's very different than the Canadian sector, which is sort of a winner, the largest company, the most capitalized company takes all approach. And that's really because of the way the distribution's set up in each of the individual provinces. In the US, because it's federally illegal, you have this interesting situation where you can't ship product from one state to another. So we can't take flower that we would cultivate in Nevada and transfer it to California. Every state has to sell the cannabis products that are produced in that state. So it creates an environment where, yes, there are some fantastic companies that have done a great job getting into lots and lots of states and have built into huge companies. But there's also a real opportunity for companies that are focused in limited license states to build in a very measured way and in a very disciplined way with focus on operations. And, for a company like ourselves that has a 5-year track record in Nevada, we've got great products. We've been building them for a long time. We've got a strong brand. For us to be able to move that into another state, or in our case, 4 states, which we've done fairly recently, gives us a huge opportunity to take our knowledge, take our experience, take our products, and continue moving forward.
So California, Nevada, Arkansas, and Ohio are the 4 states. You and I actually talked yesterday about how tourism's down 67% in Nevada, but year over year, sales are up almost 35%. So talk to me about specific markets and the opportunities that they present. And let's begin with Nevada, let's say.
Yeah, obviously Nevada's our home market. We got our first, we got our cultivation and production license in that state roughly 5 years ago. And it was a tiny little market. It was a medical market at that point, very low card count. And we built the company. We got very good at cultivating. We got great at producing, and we built out a product portfolio in a really supportive early stage environment. And I think the other thing we did, as we were growing in that medical environment, was built a great distribution network in the state. And all of a sudden, Nevada went adult use, and that's a real rocket ship for any state when that happens, cannabis sales wise. But I think, the other thing that worked really well for us in Nevada was, as we were growing as a medical company, getting better at everything we do, we started looking at these other states to apply for licenses. And that included Ohio and Arkansas. And I think
I was going to say Arkansas is an interesting one because you don't hear a lot of within that state. But, again, sorry to interrupt, maybe talk more about the actual state and what it presents, because it doesn't get the rightful attention sometimes it deserves.
Yeah, I think, our focus has always been limited license states. Arkansas is a limited license state. There's roughly 3 million people in the state. There's less than, I think there's 33 dispensaries. Less than 30 of them are open right now. So when you have that, large population, and a relatively small number of cultivators and a very small number of dispensaries, you create a real scenario where you can come in with an early mover advantage, and really do well in the market. Similarly, Ohio is a limited license market, roughly 11 million people, less than 60 dispensaries in that state. And we've been operating the dispensary there since February of last year. So we really like these limited license opportunities. I think when you look at a place like San Diego, and that's more on a jurisdictional level,
Yeah.
or at a municipal level, there's 16 dispensaries that are licensed for the entire city of San Diego. Of course, we opened ours there in April of this year.
That's, you talk about the state of California, many jurisdictions that people fail to understand. But so walk me through the whole San Diego opportunity. When did you, I guess, see, like, based on the research that you put together, and where specifically in San Diego is it located?
Yeah, we're in the Miramar area, which
Yeah.
is a great area. Gives us tons of reach. And that was a license that we bought as part of an acquisition in late 2018. We own 60% of the license. We have a partner in that. And as we bought the license, we developed out the dispensary. Our real estate team and our development team did a great job building out a really, really user-friendly dispensary. Huge parking lot, which is key to success in this business. Yeah. And huge kudos to our team. They got it open in the middle of, or late April of this year, right in the middle of COVID closures. I mean, I don't think you could script a tougher time to open up a new operation. And our team did really, really well.
So how do you do that? You deal with the pandemic, and then during this pandemic, you basically expanded. So what's that say about your company? And most importantly, what's that say to your investors?
Well, I think that, there's a real focus on operations here. And I think that a lot of investors are looking at companies that are well run, that have a good growth profile, that are going to be adding revenue. We have an interesting situation where the bulk of our revenue right now is not actually reported in our financials. It's managed revenue.
Right.
We do report it in press releases, but that managed revenue will start to turn into top line revenue as we go through the next series of financials that come out.
What's your year-over-year growth currently right now?
We're just about to put our 10K out, so I don't want to sort of upset the financials that are pending. But we're in a really strong position here. So if we go back to our last quarter, we did $1 million in just over $1 million in top line. But when you bring in all the revenue, the managed revenue and the top line revenue, we did just over $4 million in revenue. And that doesn't include the San Diego dispensary that we opened at the very end of April, or the end of the last reported quarter, or the Arkansas dispensary that was open very close to the end of the last quarter.
Speaking of Arkansas, you got some good news this week. Got a nice little award. That was exciting to hear for you guys, I assume. So Arkansas, just in case my viewers don't know, is the largest cannabis resource website, arc420.com. They name Body and Mind basically the best dispensary within the state. So saying that, what is it you guys are doing? And based on their feedback, what was their response to say what you guys are doing better than, say, the competition?
Yeah, I think this was a user-generated voting scenario. So they really didn't have a lot of input. ARC420 was, I think, really progressive in looking to come up with this award and give, really medical patients in Arkansas the ability to vote on their best dispensary. So I'm not sure that they can comment on why we're better than the next group, but I will
all
say
user based then.
That was all. It was a voting situation. I will say that our team in Arkansas it's a real reflection of what we have been able to do, because we've got some longevity in the business, and our general manager in Arkansas was the assistant general manager in Ohio. So we've got this ability to take the knowledge that we have, the experience that we have, the people that really understand the Body and Mind culture, that are proud of the company, and move them into some of our new expansion opportunities. And we feel that that's just a great way to grow the company.
I know most companies will say, look, we're positioned to succeed regardless of the outcome of the US election, but let's not kid ourselves. If there are some things that obviously change in the near term future, What kind of opportunity does this present for investors within the U.S. cannabis space?
I think every investor has to look at a couple different scenarios. And I think if you game it at the two scenarios, one scenario with a Republican win, one could assume that this is going to look a lot like it has looked so far, which has generally been, we're going to let the states do what the states want to do. Right now, there's a number of ballot initiatives on the state level that may flip some medical states to adult use states.
Right.
And we're also hearing, some state governors saying we're going to bring this in ourselves. So if nothing changes on the political landscape, if we have the same administration that we have in a week or 2 weeks or 3 weeks, then I think it's going to look a lot like it has. If we have a change in administration, there's certainly been some discussion around the fact that we could see safe banking, we could see access to capital markets, or we could see something even as broad as some full decriminalization, descheduling.
So one big thing, obviously, a lot of money was spent and a lot of companies ran into obviously cash flow issues over the past 18 months here in the US. You guys have been fundamentally sound. Great management team obviously in place too. You're focused on the 4 states right now. Is that the short-term plan, just to focus on that and do it really well? Or do you have long-term plans to expand into different states?
Yeah, we have some current expansion plans in the states that we're in right now. We're building out cultivation in Arkansas. So we built the building already. We built the building and the dispensary together. So we've spent all the CapEx on that. And now got the dispensary opening, running, optimized. Now we're starting to do the last final stages to get the cultivation open there. We're working on a production facility in Ohio so that we can bring our Body and Mind branded products into the Ohio state and also into Arkansas. Are we looking at other states? Absolutely. Are we looking to go deeper in the states that we're in? Yes, we're looking at that as well. So we see a lot of opportunity right now. We certainly see, we stayed away from what we saw as very expensive deals over the last year and a half.
Yeah, for sure.
And are really focused on deals that are accretive and deals that make sense for our growth profile.
What do you think was the credit to that? Obviously a good business sense, but at the same time, it's like, companies like yourselves, instead of spending money, sat back, maybe made more strategic decisions. But what was the thought process behind all that? Because things 12 months ago looked a lot different than what they are today.
Well, Shad, I'll be honest. I don't think there was a lot of sitting back. I think there was a lot of going and looking at opportunities and saying, wow, that seems expensive. Yeah. How's anyone going to make any money off that? And, it's interesting. Some of those opportunities are coming up again. Look, there was a lot of money that came into the industry, and there was a lot of people that, felt like valuation should be probably a lot higher than made sense. And it never really made sense for us. So we never jumped on anything. But we are starting to see a real improvement in opportunities there.
Michael, I appreciate your time.
Thanks very much, Shad.
All right, let's keep in touch.
You bet.